Hey everyone, it's Imran from Options Insight back with another Trader Chats episode. Today's episode is called The Art of Trading. And I've got Brent Donnelly here from Spectra Markets, who actually wrote a book called The Art of FX Trading back in 2019. Welcome, Brent. It's a pleasure to finally get to see you.
Hey, Imran, how you doing?
I'm great. Thanks for coming on, man.
Sure.
I've been a trading mentor now for about 4 or 5 years, but I think you've been doing it even longer than me. And you've got decades of experience trading. So, I feel pretty honored and privileged to speak to you, and I'm sure the audience are going to learn a lot from you. So why don't you give us a quick background of, how long you've been trading, what you've done, your career up to now.
Sure. I'll try and keep it manageable because I got a long resume. So I came out of school. I was always interested in both writing and trading. And so that was kind of like always like the dual in my mind was like to pursue something more creative or to go to trading. And I grew up in the era of like Wall Street, the movie, and like Liar's Poker and all that kind of stuff. So
Mhm.
even though in hindsight, I realize those are cautionary tales, when you're 16 years old, they don't look like cautionary tales. They look like invitations to come and, make money on Wall Street. So I initially started in currency trading in 1995. And really that's been my bread and butter my entire career. But I did traded my own money in equities for 5 years. In 98, I actually quit because in those days, FX trading was very flow driven. So it's more like being like a blackjack dealer than a trader as people would perceive it. It's a lot like there's some elements of poker and stuff trying to beat your counterparties, but there was no like global macro or real like prop trading mentality in those days. So I felt like it wasn't going to intellectually satisfy me, so I quit. And then I went home to Canada. I had a TV show on for a couple of years, like a cartoon that was on TV. And then I was day trading at that time as well. So I day traded for 5 years. And we can talk about this later if you want, but decimalization and like failure to adapt killed me in 2002. So, and then my TV show got canceled. So then I was like, oh, I guess I better get a real job. And then, so we overlapped at Citi, as you know. And then my career from then on was mostly trading FX and running desks, running spot desks at banks. I did work at a hedge fund for 3 years as well, just as a portfolio manager. But like I said, really my bread and butter has been as a market maker. But then what I've been able to do over the years is kind of just by fluke, really. Like I wasn't being thoughtful about it, but it just worked out well. Is I've been able to integrate my writing and like my creative desire into my job as a market maker by talking to clients and then writing. I write this daily global macro piece that a lot of clients got or get. And so I'm now kind of found a nice balance between trading and being more creative. And so now I'm at Spectra Markets, so we service hedge funds and banks in FX and FX derivatives. So I cover like 150 clients, mostly hedge funds. And then, like I said, I write my daily, and then I do some other stuff like educational Substack and kind of just feeding the desire to write. Like I just love writing.
Mhm.
So there's one funny thing is that I remember when I was in my 20s, whenever I saw a book about trading, I'd be like, why is this dude writing a book about trading? Like, isn't he making enough money trading? What's the point? Like
Yeah.
kind of thing. But now I understand as someone who just likes to write, when I wrote my books, there's never any intention of like financial gain. Like, yeah, if you self-publish, you can make decent cash, but that was never the point. It's more just about like writing for the sake of writing is really what I do. And then if people enjoy it, that's awesome. So
It's so
yeah, that
funny.
takes you all the way to here.
It's so funny you say that. It's like the same thing when, because I love teaching. So my passion, rather than writing, is more the education side.
Mm,
And I found that throughout the years being at the banks where I'd teach interns and grads, and I
yep.
find it really satisfying.
Mm,
And I'd be happy to give up like 3 hours of my trading day to just teach these kids some stuff. And other like heads of desks are like too busy to even speak to them. But it's funny because then people look at you and say, oh, well, if you're teaching trading, you can't be that good, because if you were
Right.
you'd just be making all your money trading. You wouldn't be
And
trying to
you know
sell
what?
courses and things like that, right?
And one thing I would say to that is that that's usually true. Like, I think there's a lot of charlatans in the business of trader education and things like that.
Yeah.
So I do think people are right to be skeptical. But then, of course, there are good people in every business, and there's plenty of good people trying to teach people how to trade.
Yeah.
And I had the same experience. Like, I hated management. Like, I ran the whole FX at Nomura for a while. So I had like 50 people working for me. I just did not like that. But I
Yeah.
always like mentoring people and teaching, especially when you have the right people to teach, that can be very satisfying.
Yeah, and what I found was, when I first started teaching, I focused on institutional business, so teaching bank staff, asset managers, things like that.
Mm.
But what I quickly found was, those people are only there because their boss tells them to be there. They're not there because they want to learn, and they're
Interesting.
spending their own hard-earned cash and investing in themselves to learn from you, because you've done it for 20 years, right?
Right.
And when I taught retail traders, I was like blown away by the engagement and the satisfaction that I got from teaching these people, because they were so hungry, they were so engaged, they were asking questions, and it was so much more, because I like the interactive style of teaching. So
Sure.
when I teach people, I ask them as many questions as they ask me, because that's how I get them to learn, right? But there was no use asking like the institutional people questions, because they just sit there silently, because they probably weren't even listening to me.
Right, they're plugging on their phones, checking where Tesla's trading or whatever. Yeah. And that's an interesting observation, because I don't know if you have kids, but you see that with kids too, is that if you put them in an environment where they can just be curious and learn about what they want to learn about, like that's what Montessori does, for example, you just see them like explode with curiosity. And when you jam them in a desk and teach them biology and they're not interested in it, it's just like, it's very, very difficult to get through. So yeah, you got to have a receptive audience, I guess.
100%, yeah. And as a teacher, it's so much more enjoyable as well.
Sure. Yeah, for sure.
Yeah. All right, great. So, okay, good. So we've got a good idea of your background. It sounds like quite similar to mine in some respects. So now let's move on to the kind of trading strategies. You mentioned FX as your kind of primary asset class. How would you say over the years, you've been able to establish an edge? Like, what is your edge? Have you figured that out yet? I'm sure you have after 30 plus years, but it probably changes over time as well. But what do you think?
Yeah, I mean, that's a great question. And I've written a lot about this because I find it a really interesting topic. And as you kind of alluded to at the end, the edge that you have, or that I have right now, isn't necessarily going to be the edge that I have in like 5 years or whatever. So to give you an example of that, so in 06, 07, 08, I worked at Lehman Brothers, and my bread and butter at that time was just lead lag using correlation. So like, if gold rallies, I would buy Aussie. If S&P, say if US 10-year yields shot higher, I'd buy dollar yen, etc. There's a whole bunch of relationships in FX that are pretty steady. They're not static, but they're reliable. And so, but the funny thing is though, if I remember back to Lehman Brothers, to say there were 5 traders, I was the only one that had real-time feeds for S&Ps and gold and stuff. Like, people just didn't think that way. So it was, and there were algorithms at that time, but not as many. So that was a very effective short-term trading style at the time. And then after 2008, everyone began to understand the importance of correlation, because all the correlations went to 1 in 2008. And then also the financial blogosphere kind of started expanding at that time too. So now, like, let's say you're looking at copper as an indicator for the Australian dollar. If there's a big divergence, you'll see it on like 15 blogs. I'll be getting emails from Substack people. Like, everyone has real-time feeds. So there's just like very little edge there. So that's an example of an edge. And then it dissipates, and it's very hard to give up on something like that, because you made so much money doing it for many years. Like, really 03 is when I kind of started doing that mostly. So I made really good money for 5 years. Then in year 6, it's very hard to just go like, okay, this doesn't work, I'm going to stop doing it. And then, so really, like, so now my edge is understanding the big picture. So like global macro, and like what's priced in and what does everyone think. I think having a big network helps me a lot. So I have a good idea of, like, I don't rely that much on positioning data, for example, because I feel like the sort of visceral feeling that you get from talking to people is more important or can be more significant than data. I mean, I use both. But so getting an idea of like, okay, what's the whole global macro picture? And then understanding if current price is the sum of or the equilibrium of all that information, then what new information matters and how much will it move the needle? And so that could mean, moves in other asset classes, like I was saying with correlation. It can mean new information coming from Goolsbee being dovish when the rest of the Fed was leaning hawkish. It can be from the data, from understanding like the asymmetry going into the data and then trading the data. But essentially what I'm always looking to do is like surf the changes in narrative. And in order to do that, first you got to understand like, okay, the base case of what is the narrative now, you have to understand that really well. And then you can see as the narrative's changing. So it's a little bit more complicated than like in the past when I was trading single name equities. All I traded was I had headphones on to the S&P squawk because there was still like a live squawk to the S&P pit. And I could get an idea of when bids were coming in, and I'd get on the bid in like 6 stocks and try to make the bid offer and get out. And so really like the edge can be so different depending on where you're sitting. I mean, another thing that I've started doing a lot more in the last, I would say, 10 years is intraday effects in currency markets. Like for a long time, from about 2010 to 2015, if you just bought euro dollar at 8.15 every day, it had an insane Sharpe ratio. Like if you just bought it at 8.15 and sold it at 11, it had a crazy Sharpe ratio because there was these non-price motivated sellers that always came in exactly at 8.15. There was a fixing. It doesn't work anymore, but there was a fixing at 8.15. So they always massively sold, it would drop. And that was tended to be the turning point. So there's a lot of effects like that. Like New York tends to buy dollars, and outside of New York time zone tends to sell dollars. A lot of sort of microstructure effects like that. But all those things and like seasonality and stuff, they're all just inputs into. So really what I'm trying to do is have a probabilistic process where each input gives me more confidence that the probabilities are in my favor. But then I'm saying all this like global macro stuff, but really my time horizon generally is like 1 day to 1 week in terms of how long I trade for. So,
okay, I was going to ask, yeah.
So like 1 day would be events and stuff like that. And then 1 week would be like, okay, I can tell everyone wants to be short dollars, but nobody's short dollars. The data is weak enough. So I'm going to like buy 1 week, dollar Swiss puts or whatever, would be another thing. So just to like give it in like 45 words or less, it's essentially like understanding the current narrative and price, and then being faster and better than other people at understanding what's going to move the price before it moves.
And like I say, that's quite short term, because I think I've struggled to find much consistent edge on the short term trading horizons. So I zoom out a bit more and I try to find my edge on longer term horizons. But the reason I think I can do that is because my implementation of my trades is in optionality.
Right.
So really my edge is in the implementation,
Mm.
and like you say, understanding the macro narrative and when things are maybe too priced in, so there's asymmetry the other way, that type of thing. Right? Those are the things I'm generally trying to hunt down myself. But I also find, because I follow your Substack and stuff, I like the magazine cover strategy that you do. It's quite funny because I've got another friend of mine who loves the contrarian trade.
Yeah.
And so, but you actually made that quite a systematic process, right? That thing.
Yeah. So my objection to like trading on anecdotes and things like that is that it's easy to cherry pick. So like I know a lot of people, like there's a lot of Elliott Wave stuff about socioeconomics and things like that where it's just cherry picking because you have a view, and then when you see a certain magazine cover you do it, and if you see another one you don't. And so what I wanted to make it more empirical, and when I studied it, as you probably know, but if you go the opposite way of the economist covers that mention an asset class or a market, you tend to make a lot of money. And generally, I would say when I started, I was very contrarian because like it's a lot of contrarianism is ego and wanting to be smarter than everyone else. So But then you quickly realize if you're contrarian all the time, you lose money a lot because trends are real, like many markets trend. A lot of times macro is just bigger than positioning. So I kind of lost my obsession with being contrarian after like about 5 years, mostly just because I saw that it didn't work that well. And I think that speaks to like a broader topic, which is being able to adapt and not just stick with one thing all the time is, to me, I think that's the key to surviving in the long run. Is like people that say like, oh, I'm a great breakout trader or whatever. That's a huge red flag to me, because that means you're going to succeed probably in volatile and trending environments, and you're not going to succeed when things are quieter. And like what you really want to do is have either multiple styles that adapt to various regimes, or just like, I don't really do that systematically. Like I don't say, okay, we're in a range, so now I'm going to range trade. So in a system, I don't do that in a systematic way. What I do is try to like sit down and be thoughtful about what kind of regime we're in, and don't slam my head against the keyboard every day trying to trade some regime that doesn't exist. You know what I mean? So like if equities have been doing nothing for 9 months and VIX is at 18.8, I'm not going to be doing breakout strategies in S&P futures, because that's like your trading style has to fit the regime. And what I see a lot of is people having a trading style and not being cognizant of what the regime is. And I think that's really an important thing. So over time, what you want to be doing is like know your edge, but then like having one eye on the horizon and finding like new sources of edge. And
Yeah, always hunting for new sources of edge. I think makes a lot, because the markets evolve. That's what makes them interesting.
Yeah, absolutely, right? So if you're making money doing something, there's a bunch of computers that are probably going to soon figure that out at some point, right? Like if you have a sharp of 4 in whatever you're doing, there's some human or computer somewhere is going to see that, is going to be back testing that and say, whoa, that thing has a sharp of 4, and they're going to start doing it. So I think you have to think of it as this adaptive system that's like the alpha that's there is only going to be there for a bit, and then you got to monetize it. And one thing that you mentioned, which I think is also important, is having different ways of structuring and different tactics in your trading. That can be a source of edge, right? Like you're saying, your structuring is a source of edge. If you just buy and sell directionally with a stop loss, like that's, I mean, that's fundamentally what I'm doing most of the time, is directional punts with a stop loss. But if you can layer on different option strategies and things like that, then you can start doing a lot more different strategies. And especially you also don't then always have to be long vol, which, I mean, we could get into a whole thing about that. But if you're a directional trader, it's easier to make money when things are moving and when volatility is high. So if you're always buying options and you're a directional trader, it's wrong way risk, because you're owning vol, and you're relying on high vol in order to be able to trade directionally. So if vol collapses, your directional trading sucks, and you're bleeding theta. So like that was part of my development, was figuring out ways to use options where I'm not just always long vol, and like, because then you're doubling down. You really see it when you run a franchise. Like I ran a bunch of spot desks at banks. And if you map the P&L of the spot desk overall against volatility, it's like 45-degree angle, basically. Like the more vol, the more money you make.
That makes a lot of sense.
Yeah, I mean, that's partly a flow thing, but also just it's easier to trade when things are moving.
Yeah, I mean, I had a lot of friends who ran desks in FX as well, and one of my best friends, and he was just permanently short vol.
Right. Yeah, I mean, that's correct. I think
He's
that's
like, I have to be. I have to be short vol all the time, because if it kicks off, I know we're going to make a fortune.
Right.
Flow is going to go up, opportunities are going to go up. It's just naturally going to happen. So I need to hedge against the fact that nothing happens.
Yeah, and to avoid putting a bunch of trades that you hate, like what we would do generally is find like, okay, I think the dollar's going down right now, so I would only sell dollar calls with limited downside, like using one touches or whatever. But everything I do selling vol is always limited downside. But I very often will pick a direction, because I find it very dissonant to like be short dollar puts when I'm bearish dollars. It just like gives me the heebie-jeebies, and I just always want to cut it at the worst time. So Anyways, that's a
Yeah.
whole different thing.
Yeah, I think we could go on for hours about. Okay, so then we talked a bit about the evolution of markets and how you've got to change with the market a bit. So how do you see the impact of those sort of things, like the things I've put, high frequency trading? How has that, obviously that's changed things a lot from back in the early days where you used to have this edge on correlation and the lead lags. I guess the HFTs took that edge away pretty quick.
Yeah.
Algos obviously have been growing with just AI and machine learning. And now we've got these zero DTE options that it seems like the algos are all over as well.
Yeah.
So what are your thoughts about that?
So again, it goes to adaptation. Like when back in the day, there used to be trades where you could just trade the economic data. Like non-farm payrolls is strong. I'll buy dollar yen and sell it 50 points higher because that was before the algos. Now the algos just sweep everything using like some kind of simple calculation of how much dollar yen should move based on payrolls. So then my adaptation became the next derivative, which was the algos are very risk averse and they tend to create overshoots. So then I tend to play more like very short-term mean reversion on the data, like whatever the initial spike is, like count to 10 and then fade it kind of thing. I mean, there's a lot more, logical filter to it than that, but that's generally the idea. Because as soon as there's any momentum change, the algos just get out right away. So they're like buying the initial move, and then as soon as the momentum fades, they get out. So I found sometimes you have to think like a second derivative, which is the same as like playing against humans in poker or whatever, right? Is you can't just look at your cards and go like, oh, I got king queen, that's a good hand. If you think the other guy has ace king, then that's a king queen is a very, very bad hand. So like knowing the actual what's going on in the game is important. And I feel like I could go into specific examples, but I think it's more about philosophy of like, okay, zero DTE options are a thing now. A lot of people are complaining and saying they're stupid and whatever. Like that's just a waste of time. Like try to figure out where the put walls are, the call walls, or when do people start selling the gamma at 2:30 p.m. because nobody wants to be long at 3:59 p.m. Like start looking at how can I make money off of this? That's, I think, the fundamental thing that people should be doing is, okay, something new is going on in the market, whether it's algo, zero DTE, whatever. Don't like think, oh, okay, this sucks, or this is like, I can't make money anymore. Maybe it just means like you got to figure out how to make money in a new way. So I feel like being open-minded and adaptable. And I mean, we saw this when the algos came out, right? So that was like 2004, 2005. Some of the traders were like, oh, this is bullshit. These algos are always front running me and this and that. And it's like, okay, well, if they're front running you all the time, like maybe there's a strategy that can profit from that. You know what I mean? So I think it's a mindset. The mindset has to be, my thing that I'm doing today probably won't work tomorrow. So I'm on high alert to figure out new ways to make money and to like be thoughtful about what, I'm not an expert in like super short-term equity options. So I can't really say what the strategy is, but like, I know from talking to people, there are strategies that if you come in with a fresh mind and look at this and you go, wow, there's this crazy new phenomenon. What does it mean? Does it mean like certain things probably happen from 2 to 3 p.m. and I can profit from them, that kind of thing. So I think that's really the key is the times I didn't adapt, which I've written about in my books. Those were the times when like I really failed as a trader and then had to like rebuild. And the times when I really succeeded were times when I was like, wow, this is a totally different regime we're in. And like, I got to totally change what I'm doing. For example, like in 08, I could see that everything was different, starting at some point in 08. And a lot of people just kept trading the same position size, doing the same thing. And most of those people blew up or just were getting stopped out constantly. Whereas if you, reduce your position size and rode things for 6% in 08, you could make money almost every single day. So I think it's always about understanding the regime and adapting to it and not complaining about the changes. Cause like that's the nature of markets, right? Is they're always changing.
So you just said failed when I failed as a trader. And that made me think like, because that's what the market does. The market makes you feel stupid. That's what its job is basically, right?
Yeah.
And being someone who's traded even, I don't know, 10 or more years longer than me, how many times in your career has the market just made you think, oh my God, I suck as a trader. Maybe I need to do something else, basically, right? And how have you dealt with that feeling and that emotion?
Yeah, it's a tough one, like from the emotional side, and then there's also like the sort of the logical side. So in 2002, my main strategy was capturing large bid offer on stocks in the direction of the futures. So like I had a good angle on which way the futures were going, and then I was trying to capture like a $2 wide stock because it was before decimalization, so spreads were wide, but
Mm-hmm.
also before the bubble popped in 2000. I used to print out a sheet of all the stocks trading over $100 because I wanted like large bid offer and large absolute value to minimize transaction costs. Like if you're trading a $1 stock like that, you're going to pay so much brokerage because there was brokerage in those days. So
Mm-hmm.
that list of stocks over $100 was 4 pages long in 1999, 2000. And when I shut my account in '02, it was 4 stocks. So I was always gross positive even through that whole time, but I was paying more and more bro as the value of the stocks went down.
Mm-hmm.
And what I was doing was like basically thinking, man, if I just try a little bit harder, I'll definitely be able to like figure this out and make money. But the reality was that what I was doing before didn't work anymore, and I didn't know how to acknowledge that. Um, so that time, really, like I didn't have a choice. I just my equity was running down, and I had used my account to pay my bills for 5 years and stuff. So I didn't have any other money other than that. So that time I was kind of forced, so there wasn't like a ton of psychology. But then at the end of '07, 2006 and 2007, there was a carry bubble. So like any currency that had a high yield, there was like a huge bubble. Basically, these funds were buying them and then also selling options to lever up. It was kind of like what long-term capital was doing in 1997.
Mm-hmm.
And I just felt like I can see this is gonna explode. And then there was subprime was starting to happen, and like it was just so obvious that the shit was gonna hit the fan. But I was so early, like as many people were,
Yeah.
that it just kept on going up every single day, up a tiny bit, up a tiny bit, up a tiny bit. And I remember actually I wrote, I think I actually mentioned this in one of my books, but I wrote an email to my wife saying like, and I was flat on the year, which was kind of unheard of as a bank trader in the seat that I was in. Like flat was bad. And I
Mm-hmm.
remember writing a thing to my wife saying like, it was like December 30th of 2007. Like, I don't know if I can do this anymore. Like I'm losing money every day. And I like there were still client drive-bys, so you'd lose money to that. And I was just like, I don't know if I can do this anymore. I gotta like reevaluate what I'm doing with my life. And then it was New Year's, and I kind of like New Year's, I'm a natural optimist, and New Year's kind of gives you like that natural optimism.
Mm-hmm.
And I was like, you know what, I've just got to keep grinding, and I'm just gonna like assume it's gonna work out. And then '08 was my best year ever. I mean, like obviously after that the carry bubble did collapse. And so I think part of this is a very hard one to answer because the answer of how to deal with those situations is to keep grinding and like
Mm-hmm.
stick to your process and believe in yourself. However, that implies sorry, I got distracted there. That implies never stopping out. And the other side of that coin is that most people don't succeed at trading, and so you can't just keep on pounding your head against the desk hoping it's going to work, right? Like I had enough empirical evidence by that time from 1995 to '07 that I think I kind of knew I have like the X factor or the skill to do this. And now it's just about like grinding and getting back to a positive mind state or a positive mental state. But
Mm-hmm.
there also is a point where people also should decide, you know what, the opportunity cost of trading, even if I'm making a little bit of money, I could be doing something else that I'm better at or that I enjoy more. So I get that question a lot, like how long should I do it before I quit or whatever? And to me, like if you're not generating a meaningful income after 2 or 3 years, or like at least clearly feel like you're on the right track, I think then you got to really ask, like, is this the optimal thing for me to be doing? Because success rates are low, barriers to entry are basically nothing, and it's just a really hard business to be in. but then, you know, the tail of the distribution is so sexy that it's very attractive to do it, because if you succeed, you make a lot of money and you can have a really good lifestyle. So I think essentially, to sort of the shorter answer to your question is, you got to have a process that you truly believe in. And when it's hard, you just grind, and the longer you do it, the easier it gets. Because to me, like, I've lost money so many times now that when I lose money, it just doesn't hurt that much.
Yeah.
Sorry. And one other thing I think that is really useful is collecting data on your trading. So after collecting data for about 5 years, I knew that my hit rate on any given day is basically 50-50. I make money half of days and I lose money half of days. And then my P&L is really determined by the ratio of my, you know, how much I make on the good days versus how much I lose. And having that data, especially over multiple years, really desensitized me to losing money on any given day, because I just realized, you know, like, it's a coin toss essentially, but it's a coin that pays 2 to 1. So that's a good proposition. But when the coin comes up tails, you don't get all mad and smash your head against or smash your hand on the desk or whatever. You just go, okay, well, that's variance, and there's a lot of variance in trading. So I think developing like a rigorous process and understanding how you make money so that you believe in yourself when variance kicks in is also very important, because otherwise you don't know if it's just variance or like you suck at trading.
Yeah. That's something I talk about, journaling and analyzing your trades, because that's how you really know what your edge is, basically, right? You
Right.
just said it, right?
Yep.
Your edge is not trade selection, because it's 50-50, right?
Mhm.
But your edge is that you make more money on your winners and you lose less money on your losers, right? So
Yep.
that's essentially what your edge is. It's the way you're trading, risk managing, and structuring that trade, right? Okay, and then you know, what about the fact that now you run your own business? Because I've been through that transition as well. So whilst I love the market and I've managed to find a passion in teaching, so I've kind of combined the two. Running a business was, you know, something I'd never done before, and I wasn't really sure about how to do it. How have you found that transition to starting Spec? I mean, obviously you wrote a few books as well. I haven't been down that path yet. I don't know, maybe I will one day. But how have you found the whole business side of things?
So for me, it was very refreshing, because I've always kind of had like an entrepreneurial spirit, I guess. But when you work at a bank, it kind of gets beaten out of you over the years, because it's just, you know, they're very focused on specific metrics, and, you know, creatively developing the business isn't one of those metrics. It's, you know, you're basically trying to monetize the existing business and keep everyone happy. And, you know, the incentives are different. So it has been very exciting for me to be able to like be an entrepreneur for the first time in my life, but then extremely daunting, because of the paradox of choice of, I just have so many ideas and so many ways that I could build this business, that it's kind of overwhelming at times. And so for me, the really important thing has been prioritizing. Like, I cover my clients, I write my stuff, and then I'm trying to build like an education platform kind of product as well. And anytime I do anything outside of those three things, I just feel like, man, I shouldn't have allocated my time there. So I think it's mostly just about like time management. And you know, if you're like kind of a nice person and you get asked for a lot of favors, you tend to do a lot of people favors, and you know, go, can you do this conference for me? Can you do this? Can you do that? And so learning to say no and focus on what's important, I think has been helpful. It took me a while to figure all that stuff out, but anyways, I really like it. I feel like it's given me more room to be creative. I can write more without censoring myself as well too, because again, when you work at a bank, you know, you're not going to criticize the Fed, for example, or you know, if you work at a bank that is levered to China, you're not going to say anything bad about China and that kind of thing. So it's given me more creative freedom. And I think not being a market maker has helped my trading and has helped my writing as well. Just, you're very in the weeds as a market maker. You're always being given positions you don't want. And then a lot of subconscious stuff happens where Like you don't have a view, then someone gives you 100 million euros and you're like, oh, I'm bullish euro now, because you have the position. Like I think there's like a psychological framework where I think it's in the endowment effect, essentially. Like once you have a position, you start justifying why it's a good position.
Yeah.
And as a market maker, that can be tough. So I enjoyed being a market maker. I mean, I did it for 25 years or whatever, but I'm happy to be disconnected from that insanity for a while.
What about the camaraderie that comes along with being on a trading desk? Is that something that you missed? Because that's definitely something I felt when I first started out on my own, and I was no longer part of
Yeah.
the desk.
That's a good question. So when I was at Lehman, that was probably one of the most fun times of my life, like trading. And the group of people was awesome. Everyone was super professional, but we still had fun. Everyone was making a lot of money. And then obviously Lehman went under, and that's when I went to work at a hedge fund. So I went from like October 2008, total chaos, people screaming. I was a market maker, dollar yen, which was like the epicenter of the whole thing. And I went from that to like, a glass office in Connecticut with 12 people where nobody talks on the phone. And if you want to talk on the phone, you go to the phone room, and like you can hear people's footsteps on the carpet and stuff. And I found that very dramatic and difficult because part of my trading at that time was sensing the electricity of, in a crisis when the shit's hitting the fan, all the phones are ringing, people are screaming, and then sometimes you can feel that electricity start to dissipate, and that's a great time to buy like S&P futures down 5%. But this time, so that was last time I found it very difficult. This time I went from like COVID at a commercial bank where like 80% of people were already work from home and everyone was grumpy, and mostly the trading floor was quiet most of the time, to this where I have a Zoom with 12 people, like a couple of guys in Singapore, 5 guys in London, and like 5 guys in New York. So,
Right.
and we're doing transactions with each other and helping each other with trades and stuff. So I actually feel like I'm in more of a trading floor dynamic, even
Yeah.
though I'm in an office by myself, because of the Zoom with 12 other traders.
Mm-hmm.
I actually feel this time more like I'm part of a fun trading environment than
Yeah.
I was at my last job. Simply not because that place was a bad place to work. It was just because it was COVID and everyone was work from home. So trading floors aren't quite what they used to be, but they certainly were not in 2020.
Yeah, the virtual world has definitely helped us kind of connect with people who are on the same wavelength.
Yeah.
And that's the thing. Like you might work at a bank surrounded by 6 guys, but you only get along with 1 or 2 of them.
Yeah.
Whereas now
Yeah.
you can choose who is part of that Zoom room that you're in,
Yep.
and they
Yep.
can be anywhere on the planet, but they can be your people, and you actually get that camaraderie and that connection that you feed off, basically, right? So
Yeah.
yeah.
And I think that's something that's hard for retail traders because, like, even if I wasn't on this Zoom, I have 150 chats with hedge fund guys and girls, mostly guys. And so I'm kind of like constantly in the I guess like the zeitgeist or whatever, right? I know what people are talking about. I know generally what's going on. And like, yeah, sure, Twitter offers that to some extent, but there's so much bias and the incentives on Twitter are to be outrageous and dramatic and bearish, essentially, whereas the incentives in the real world are to make money. So I feel like individual traders that don't have a good network are at a disadvantage. And I would, as much as it's difficult, I would suggest or recommend that people try to build some kind of network, even if it's just like 4 people who don't totally know what they're doing and are just
Mhm.
learning. I feel like that still has power because, to me, a lot of the time, for me, when I have my ideas, just having a sounding board is the most important thing, because I feel like you have so many thoughts in your head and ideas, and just saying something out loud or writing it down tends to give it a little bit more meaning. And then a lot of times through a conversation with one of those sounding boards, I'll realize like I'm missing something or my idea is not that great or whatever. And it's not
Mhm.
necessarily a result of their feedback. It can sometimes be simply the act of me saying the thing makes me
Yeah.
realize, yeah, that idea doesn't sound that great when I say it out loud.
Well, it's not just that. It's like because I love the sounding board thing as well, right? Like I used to use my juniors as a sounding board, and they
Right,
had
right.
no experience, so like they
Yep.
weren't going to tell me what I'm missing. But it's like
Mhm.
when I'm explaining something, and it's similar to when I'm teaching something, it's reinforcing my own understanding. So
Sure.
when I'm explaining my trade idea to someone, it's reinforcing how much conviction I have.
Right.
And if I hear myself explaining it, and it's like, the more I say it, the more I realize it's a no-brainer, I
Yeah.
might
Yeah.
triple my size,
Yep.
basically, right?
Yeah.
But if I
Sometimes
just
you
say
can
it
hear
and it's
your own
like run
voice,
of the
right?
mill, huh?
Sorry. Sometimes you can hear the intonation of your own voice and you're like, wow, I'm really excited about this thing.
Yeah,
Or like,
yeah, 100%,
or
100%.
your sentences are petering off and you're like, wow, this is a horrible idea.
Or yeah, it's not even worth doing. I'm bored. I'm bored as I'm explaining it,
Yeah.
right?
Yeah. Yeah.
Yeah,
Absolutely.
yeah. No, that makes a lot of sense. And then, what about? So you mentioned options. So are you a fan of trading options? Is that something you use much in your trading? And how do you think about it?
So yes, but like I said, I feel like I have to be very careful about just buying options all the time. A lot of times I feel like options give you really good optics, but low expected value. And I think so for me, it's always about thinking about not like, does this thing pay 8 to 1? Because like, sure, you can buy a lot of RKOs and FX that pay 20 to 1, but they're never going to actually pay 20 to 1 because it's impossible to hit you got to pin the strike or whatever. So
Mhm.
people, I think, tend to get interested in trades that have good optics, whereas what you should really be looking at is high expected value. So
Mhm. Mhm.
even sometimes getting negative leverage, like selling a call spread where you're risking where you're risking 2,000 to make 1,000. Sometimes I'll do trades like that because I feel like the expected value is high because obviously you're selling something out of the money and you think it's going down. And even if it goes up, some kind of feedback loop is going to happen where it can't go up above X.
Mhm.
So I feel like thinking in terms of expected value is really important in options and not looking at payoff profiles.
Mhm.
And then for me, trying not to be a net buyer all the time. And then the thing that I think I'm good at in options is like still short term is identifying moments when vol is underpriced or when gamma is cheap. Like through non-farm payrolls generally or any major known event, gamma's and is going to be expensive because market makers don't want to be mega short that stuff and just it's an obvious event. But sometimes you can notice you can find less obvious things like say I know if 125 breaks in dollar yen and everyone's short, there's going to be a ton of stops above that. So buying like 2-day 125s when I think there's going to be an acceleration through a technical point, or
Mhm.
like there's a speech by the assistant deputy governor of the RBNZ and nobody's really paying attention to it, but we're right at the turning point for monetary policy. So, there's a tiny risk premium there, but I think New Zealand dollar could move 2% if he's dovish, like that kind of thing. So
Yeah.
looking for like moments where I feel that there could be abnormal amounts of volatility, but staying away from events because like obviously those are
Oh, events. You
priced.
have to sell vol on events. It's the
Yeah,
only,
yeah,
that's where your edge is. But
but it's
then you
hard.
have to be willing to take the risk of a massive move, right? But
Yeah.
typically, the options market overprices events, right?
Agreed. Yeah, and so yeah, you'll find like I'm sure you found this when you were younger that even if you're right on the direction of the event, like you think CPI is going to be weak and you buy dollar yen puts, you end up pinning your strike or losing money so often because the market's just efficient, right? Like there's no
Yeah.
free money on buying events. But I do find options just give you a lot more like instead of like I was saying earlier, thinking in a super linear fashion of like I'm going to buy it here and I'm going to then sell it up here, which is perfectly valid, like I said. But there are times when that's not the path that you think is going to happen. You think you have a strong reason to believe nothing's going to happen for 2 weeks and then it's going to rip or things like that. So when you
Mhm.
start introducing like the third dimension or getting away from linear trades, I think at times you can have an edge because you understand something that the market doesn't understand. And I mean, that's always the thing, right? Like I'm kind of stating the obvious here and saying like, I want to buy vol when it's mispriced, but it's kind of like the Druckenmiller thing of you want to get involved when your view of the world is different from the market's view. Like buying NVIDIA because AI is going to be big. Yeah, okay, it might work because it's a momentum trade, but like to me that's not an appealing intellectual framework to as opposed to trying to understand something that the market doesn't yet understand.
Well,
Is,
that's
is
where the
that,
big opportunity is, right?
I think so, yeah. And there's something to be said for momentum and trend following. There's nothing wrong with that. But then don't call it a fundamental trade. You're just riding the momentum, and that's fine. So yeah, and even in short dated options, there are opportunities quite often where the market's just not seeing something that I'm seeing, and then I'll buy that. That's when I'll buy vol.
Interesting. All right. Sort of changing pace a little because we're kind of getting towards the end.
Sure.
You obviously traded for a very long time, longer than I have, 3 decades plus.
Yep.
You've learned a lot of lessons. How would you say any of the lessons you've learned in trading have translated through to your life in general?
Oh man, that's a good question. I should write something about that. I mean, absolutely. I think so. In terms of, I mean, I could actually give you many answers to this, but one of them I think is just coming in and trying hard and starting again every single day is kind of like my philosophy in life. Like, no matter how bad or good things are, I try to just come in and start fresh every day and try my hardest, even if I don't feel like it. And I think I learned that from trading, because trading can just be so demoralizing and so exhausting that if you let it get to you, it'll kill you. Like, I mean, not necessarily literally, but it'll kill your desire and your ability to succeed. And then I started realizing that's kind of like the same thing with like writing a book or whatever. The thought of writing a book is daunting because, like, Alpha Trader's 500 pages, which I never would have imagined when I was writing it, when I was thinking about it. And if I ever thought like, hey, I'm going to write a 500-page book, it would just, I would start crying because that's impossible. Whereas the idea of just like, oh, okay, I'm going to write an outline for a book, and then like, I'm going to make this outline more detailed. Okay, I'm going to try to write 3 pages every day. And, 3 pages a day, it takes you less than a year to write a book. So kind of thinking about every trading day as its own thing, thinking like chunking everything into smaller pieces, I think has helped me. And a lot of it ends up being grinding, like working hard when you don't feel like it, is kind of what you're forced to do as a market maker and as a trader. And then I try to expand that to the rest of my life, even as a dad. Like sometimes you don't feel like playing with your kid because you're tired or you're grumpy or whatever. But like doing it when you don't feel like it, I guess, is the difference between doing it well and not doing it well, because anyone can do something when they feel like it.
That's interesting. No, that's really good. Yeah. I guess it kind of crosses over a little bit with the living in the present, right? Not worrying about
Yeah.
the future too much,
Yep.
not dwelling on the past. I've been researching quite a lot about mindfulness and kind of what it is that makes people happy, right? Because it's not money and wealth really that makes you happy. And yeah, I guess, if you do just focus on the task at hand, take every day as it comes and be mindful about it, and just do the best you can, then you end up being a much more happy person, right? That's kind of what
Yeah, I feel like some of these things are hard to talk about because they're so cliche. Like
yeah.
journaling and trading, everyone says that, but it's a cliche because it's true. Like being in the present is a cliche, but it's true. So like for me, the book The Power of Now, I don't know if you read that, by
Yeah.
Eckhart Tolle. That was a real like brain changer for me in terms of understanding like almost everything that's bad that goes on in my mind, or especially at that time when I read it, was thinking about something from the past or thinking about worrying about something in the future.
Yeah.
And essentially like that's where all the bad stuff happens. And then all the good stuff happens when you're in the zone and you're like, I'm writing or I'm trading in the zone or I'm with friends and like laughing my ass off or whatever, like it's always, those are the good moments. And the further you go away from that, the more you have like anxiety about the future or regret about the past or whatever.
Yeah.
And like obviously it's easy to say and it's harder to do, but I feel like reading about like mindfulness and there's another book called Why Buddhism is True, that's more like about the science of how your brain works when it's at rest versus when it's active, and the default modes that you go into, like the default thought patterns that you have. Anyways, that was another powerful book for me, is
You're gonna have to write you're gonna have to write a book about this topic, I think.
Yeah, I bet you there would be a good book, like What Trading Taught Me About Life, basically.
Yeah.
I mean, I don't know if that's a good title, but that would be a good, I think I learned a lot about poker from trading as well. Again,
Yeah.
grinding, right? Like tight aggressive. If you're a good poker player, you fold all the bad hands and you play very aggressively when you have good hands. And that's the same with trading too.
Yeah, it's when you've got a high conviction trade, you stick some size on it, basically.
Yeah, exactly. Yeah.
Yeah. All right, and based, okay, so we just said high conviction trade. So let's wrap it up with, I mean, we've kept this more philosophical and kind of was evergreen this chat so far. But like, I mean, obviously we're both pretty active at commentating and trading markets as we speak. Well, what's your kind of highest conviction view right now on markets?
I still think dollar Swiss and dollar yen will go down. I've had that view for about 3 or 4 weeks. And weirdly, actually, dollar Swiss has gone down a lot and dollar yen is a tiny bit higher from when I got in, which is slightly unusual because they usually move together. But positioning in dollar yen has been, I mean, dollar yen down was kind of the most popular trade of 2023 for a while. So I get why it's rinsing. But I think like tightening lending standards, weaker US data, and lower dollar are kind of the theme for, we kind of jumped between all these narratives, right? From like recession, soft landing, hard landing, no landing, and all that. And I think we're going to settle on some kind of like somewhat hardish landing, not like a sudden stop, financial crisis calamity, but a pretty dramatic escalation in the dramatic weakening in the US data over the next few months. So this position actually that I have is one of the rare, again, I put it on about 3 weeks ago, and I did it through 3-month options. So that's a rare one for me, because I feel like the path of least resistance for the dollar is down, and economists tend to anchor on the past data, and we've had such strong data in 21, 22 that it's just so easy for the data to be weak now. And I think you're seeing it in ISM and JOLTS and everything. I think non-farm payrolls was probably like a last gasp, which there's plenty of those last gasps before the cycle turns. So
is any of that dollar yen view also trying to play a change in Bank of Japan policy, or is it just the broad sort of dollar?
Yeah, it's a kicker, because I feel like they've been very sneaky about how they're doing it. They're kind of being smart because they don't want to give them too much free money to the market. So like, I wouldn't be surprised if they move the yield curve control in April. And so it's a kicker, but and wage growth is strong in Japan. Like they have reasons to reset the policy now that Kuroda's leaving. But I feel like it's kind of like a slow play thing where people get way too excited about it at the time. So like everyone goes into the meetings short dollar yen, like overnight went to 50 last BOJ meeting. And so to me, it's overhyped. I think in the end, dollar yen is more about the US economy and US rates, US yields. And sure, the Japanese side, it kind of matters, but the real beta in dollar yen is still just the USA.
Okay, interesting. All right, Brent, it's been really, really nice chatting to you and meeting you properly. Thanks for coming to Trader Chat.
Yeah, nice to meet you. And yeah, it was a good talk.
Yeah, really good. And well, I'll definitely get you back on sometime.
Right on.
And I'll look forward to your next book.
Yeah, I guess you might have inspired it. I'll put you in the.
Yeah, I hope so. Take care.
All right,
Thanks
cheers.
a lot, buddy.
See ya.
Bye.
Bye.